No doubt about it, the housing market in the Triad is on fire. But today, the Federal Reserve did something that could throw some ice on it and cool things down at least a little. The Fed announced it will start a process called tapering. Basically, during the pandemic, the Fed bought a lot of bonds to help the economy. Now they're going to start to taper that off since we're recovering, buying less, about $15 billion less a month for the next several months until it keeps going down to nothing. Bankrate.com's chief financial analyst Greg McBride breaks down the complicated move in a way we can all understand.
Slowly taking their foot off the gas pedal. They've been buying $120 billion a month in bonds in an effort to keep interest rates for things like mortgages and small business loans at really low levels. That's worked very well. Now they're going to slowly step down how many bonds they're buying each month to the point where they get completely out, where they're not actively buying more. The timetable will have them finishing around the middle of next year.
Bankrate says we've already seen mortgage rates creep up about a quarter of an interest point just in anticipation of them announcing that they would do this. And higher interest rates could mean less people buying houses. With less demand, prices could level off a little more.
A much more modest, low to mid single digit pace of home price appreciation over the course of the next couple of years, as opposed to the 15, 20, 25% rate of appreciation we've seen the past couple of years. I do not see at this point a risk that home prices drop in a significant way.
The Commerce Department says reported new sales for single-family homes rose to a rate of 800,000 units in September. That's higher than what experts predicted. New home sales jumped 14% that month. That is the highest rate since March. Now, sales rose all over the country, but really right here in the South, where they went up 17.5%. We talked with the Triad real estate agent about the booming housing market. He says it's causing some buyers to go to the extreme. Damon Hammock with Keller Williams says some clients even buying their houses sight unseen.
Some people are waiving the inspections. People are waiving the appraisals. A lot of people are like, there's a lot of cash flowing, a lot of cash offers for $200,000, $300,000. Like you got beat up by a cash offer. I'm like, what?
Can you imagine not seeing the house for $200,000? Hammock says he knows it's a tough market for first-time buyers, but please don't skip your inspection. That's important, he says. There are programs out there that can help you instead, so you don't have to take those drastic measures.
If you feel like you can't compete because of money, like down payment wise and stuff like that, check out some of the first-time home buy programs in the area. Especially in the Greensboro area. Greensboro has a program that gives qualified buyers up to $10,000. The whole state of North Carolina gives qualified buyers up to $8,000. And in certain situations, you can combine those two to have $18,000 more of buying power for your down payment, for your closing costs and things like that.
He says another way to save money, look outside the city where it's less competitive and a little cheaper. He has clients that have had a lot of luck doing that. They got a good deal, but they have to handle that commute. While a lot of money is moving around in the Triad real estate market, experts warn one group is missing out. Racial inequality is getting worse. See, the Census Bureau says the gap in homeownership, it was already big going into 2021. Nearly 75% of white people owned a home, about half of Hispanics did, and 45% of people who are black owned a home. And as home values surged up, that means more whites, they saw their profit starting to increase, their net worth compared to other groups. Add to that, first-time home buyers keep losing in bidding wars for properties. They typically need a loan, which can't compete with those all-cash offers.
If you're low wealth, if you're a renter, it can be a burden because those spiking prices can mean higher rents, or it can mean pressure from landlords to evict a tenant simply because they feel they can replace that person with someone who can pay higher rents. People from historically marginalized groups are certainly in danger from this hot market.
The hot housing market also caused rental prices to go up. It is hard to find a place to buy right now, so rental prices are going up because there's a lot of demand there too. High rent in a competitive housing market has people wondering What's the best thing to do? WFMY News 2's Tracy McCain talked with the experts to try to help you out.
All you hear these days are the countless stories of people being priced out on a house. It's that competitive, so it makes sense you would want to stay put. But that could end up costing you more, especially if you're already renting. Broker and realtor Shauna Harris explains why.
The interest rates will remain low. They're rising a little bit, but they're not rising quickly. And so they're still right about 3%, which is still an excellent rate. It is still factually cheaper to buy than it is to rent. And so rent prices are skyrocketing because there's so few homes.
And here's the data to back that up. According to CoreLogic, rent prices for single-family homes spiked 6.6% this summer nationwide. That is a 5% hike from this time last year, and the biggest jump since January 2005. There is no question rental prices are sky high and going even higher. And home prices are selling way above asking. So what do you do? Well, Harris, who owns Empire Realty Group, says right now your best bet is to prepare for whenever this market stops sizzling. That means plan ahead, save your money, and protect your credit. It's amazing, really, the major trickle-down effect we're seeing in this hot housing market. Home prices are up, building materials are up, rental prices are now up. And it could stay this way for a while. For more information on this story and the other parts of my series on this housing market, go to WFMYnews2.com.
One other financial move worth thinking about, refinancing your mortgage if you already own a home. You want to lock in those lower interest rates while you can. The financial analyst we spoke with from Bankrate says interest rates will start to rise again, but you could save a ton of money by refinancing now. Look, the housing market has been crazy for months now. It won't last forever, but while it does, it pays to know the tricks to getting your dream home. To make it really easy to share this information with all your friends, we're going to post this whole segment up on WFMYnews2.com.